Hello all and welcome back to Phenomenal UK for another product review. In today's review we're going to be taking a look at physical gold versus gold miners, specifically using iShares products for this. So taking a look at the iShares Physical Gold ETC with ticker SGLN, as well as the iShares Gold Producers UCITS ETF with ticker SPGP. And we'll also benchmark this against the global stock markets, so iShares Core MSCI World UCITS ETF with the ticker SWDA. So let's head over to Phenomenal Asset Comparer now, where you will also see a fourth asset I've added in here, which is the Phenomenal Canada Basic Materials Sector Index. And it's interesting to see on the cumulative returns chart in front of us that strong tracking against the Gold Producers and Phenomenal Canada Basic Materials Sector Index. And they actually have an R squared of 0.86, so a very strong tracking indeed. And we'll touch more on that as we continue with our analysis. But just initially, looking at the cumulative returns, obviously we've got the global stock market reference there, but we can see from the data period we're looking at here, 16th of September 2011, we can see physical gold has outperformed that of gold producers. Let's scroll down now, where we can see risk versus return. Least volatile asset here being the MSCI World, with volatility at 14.16% and a CAGR of 13.38%. The next one, we can see volatility for physical gold at 16.85% and a CAGR of 7.17%. Now we compare this against gold producers with a much higher volatility at 31.01% and a much lower CAGR as well at 4.4%. So initially commenting on why this might be. So if we look at what physical gold is buying, obviously it's buying gold bullions, whereas with gold producers you are carrying equity risk in there, but it's also more leveraged risk on physical gold because we've got the fixed cost of the fixed mining cost in that. So obviously if gold prices increase, then you would see higher returns during that period in gold producers versus that of physical gold. However, it also goes both ways, where if gold decreases, obviously the gold producers still have their fixed mining costs, so that then creates deeper drawdowns and volatility and such, which if we scroll down now to the portfolio stress testing chart, we can actually see this laid out in front of us. Let's look at 2022. We saw gold actually gain 11%, though gold producers saw a drawdown of minus 12% versus the stock market of minus 9%. Looking at COVID as well, we saw gold raise in value, but overall gold producers actually saw a drawdown of minus 12 again. So it's not just the fixed mining cost, but because of the actual equity risks that gold producers will hold in there as well. And we can see this throughout as well. But if we scroll down now, we're seeing that considerably deeper drawdowns in gold producers against all of the other assets shown here. Going to move over now to fundamentals, where if we look at the breakdown by the top 10 markets, we can see that gold producers is actually consisting of 55% in Canada, and that's going to come down to the Canadian shield, Canada being a very strong area for gold mining. And secondly, from that, we've got 22% in the US, as well as 10% in Australia, 6% in Africa, 4% in China, and 2% in the UK. Going to continue now and look at statistics to conclude our piece of analysis for this. So quite a short and sweet product review for today, where overall we can see the highest Sharpe ratio was that of the MSCI World SWDA at 0.85. But comparing just physical gold versus gold producers, we got a Sharpe of 0.34 for physical gold versus 0.1 for gold producers. And I would note that that is the lowest Sharpe ratio I've seen in all of my sort of product reviews that you would see on the channel. And again, we've seen the deepest drawdowns, nearly minus 80% for Gold Producers for their versus that of physical gold at minus 40.49%. Again, I've noted that the increased amount of volatility against gold. But if we scroll down now, which we've noted on CAGRs, volatility, Sharpe, let's look at actual fees. What you're paying for here. Where we can see not only has physical gold outperformed that of Gold Producers, but it's also done that at a cheaper fee at 0.12% versus Gold Producers at 0.55%. So that is certainly worth noting. And that brings me to the end of this analysis. So I do hope that was helpful and informative, and you learned a little bit about gold. And if there are any other products or portfolios you'd like me to review next, please let me know in the comments. But other than that, we'll see you all in the next one. And also, please do like and subscribe. All right. Thanks all.